Hello everyone, this is Professor Kent, and today's recording is to go through chapter 7, even though we covered half of the chapter during the class, but I'm recording it from the beginning. This is chapter 7, and we're going to be developing different type of budgets. And before we start the budget, we're going to be talking about the key element. Budget is the key element when it comes to planning and when it comes to control. When we think of a planning, involves developing objectives and preparing various budget to achieve these objectives. Control involves the steps that are taken by the management to ensure the objectives are attained. And then there's advantage and disadvantage. When we think of our personal life, we need to budget. And when we budget, what we do is define the goal objective. That's one of we need to define our goals and objectives. The advantage of the budget is we can plan it and think about the plan, and future you could be saving money for a car, or you could be saving money for a house. The other objective could be means of allocating the resources. And when we do a budget, what we do is we uncover some of the bottlenecks. The objective, the goal and objective of a budget is to coordinate activities. And how do we coordinate? By communicating the plans. And these are some of the budgets that we are going to be going through in this chapter, and your assignment will be relating to these relating to these budgets. Again, we can have a manufacturing company, we could have a service company, or we can have a merchandise. When we think of a manufacturing company, you're producing a product, you're going to do your production budget. Then to produce a product, there's three costs: the direct material, the labor, and the overhead. Those are the three costs, and then we are going to be showing you how to do that. But if you're just a merchandise company, you're buying a product and selling it, then you're going to have a purchase budget. But if you when we think of a sales budget is either you're a manufacturing company or a merchandise company or a service company. You're going to have a sales budget. From there, you're going to connect the selling. From the selling, you're going into cash budget. From there, we are producing balance sheet and income statement. Again, it is only going to be the budgeted income statement and the budgeted balance sheet. When budget is prepared for a one operating cycle. So this is a 1 year. In that 1 year, it's an annual operating budget, but it can be divided in quarters. So you could have it can be divided in quarters. These are the budgets. Again, there are 10 of them, and you will be learning all of them, and then you're going to be mastering it when you do your assignments, and then doing some questions and to make yourself understand the material a little bit more. The first budget that we're going towards is my sales budget. It's a sales budget. In order to do a sales budget, they will have to give you a question. In this case, let's read the question and prepare the sales budget. Royal Company is preparing budget for the quarter. So, and then the quarter is ending on June 30th. Budget sales for the next 5 months is this. The selling price is this. Here I'm going to include July. The reason I needed July, because maybe not maybe, I need it for the future when we're doing other budgets. So the budgeted sales are for April is in 20,000, 50,000, 30,000, and I said that we're going to do the month of July, which is going to be your 25,000. These sales are in unit, and we need it in a dollar value. The selling price per unit, they told us in the question, which is in the example, which is 10. This is also 10, and this is going to be a 10, and this is also going to be 10. Your your budget sales multiplied by the selling price per unit is going to give you 200,000. And if I do 50,000 times the 10, it will give you 500,000. We're going to get a 300,000, and we're going to get a million. And we also put it in July, and that is 250,000. In other words, July could be put it in here, but they're not part of my quarter. But we might need it when we do our production budget, when we need to know what we need. Once we sold something to the customers, and then what we're doing is we're going to collect this from the customer. So these are my sales. The collection is this sales. What we're doing, it has to be equal to 100%. If you sold something in April, 70% will be collected in April. The 30% the other 30%, which is going to be collected, I'm going to say this is 25, and then we have a 25% of that will be collected the following month, which is going to be in the May, and 5% will be uncollectible. That will be your allowance for doubtful account. Again, you just have to take the numbers and multiply it. If I go here, I am going to have 70%, 25%, and a 5, and this will be in May, this will be in June, this will be uncollectible. Again, you're going to do 70, 25, and 5. These are again the percentages. 70% will be in June, this will be in July, this will be uncollectible. That's what we're going to be doing. And they said we also were told that we have some uncollectible, we have some on credit accounts receivable, and that will be collected in full in April. So let's do that first. This is my collection in April, and what are we looking for is we're looking for what was my sale. In this case, I'm going to look at my April sale. My April sale was, we know that was 200,000. From that 200,000, we have 70% is collected in the month of April, and if that is collected in April, this will be my 140,000. This is collected in April. The other 30% will the other 25% will be collected the following month, which is May. So 200,000 times this 25, I'm going to take it to May, and that is my 50,000. The other 5% is not collectible. Then we're looking at the May sales. My May sales here was 500,000. From that 500,000, 70% is collected in the month of May. So 70% of that is my 350,000, and the other 25% is going to be collected the following month. The following month, if the sale is in May, the following month will be my June, and my June will be 125,000. Going further, we have as next my sales is my June sale. My June sales, I needed to know how much was my June sale. I'm just going to write it here. My June sale was your 300,000. We know that 70% is collected in the month of June, or in the month of sales. In this case, is 210,000. The other 30% is the other 25 will be collected in the month of July, and then the rest will be collected uncollectible. So if I were to do a quarter, so we already have the 30,000. This was collected 140,000. We collected 50,000. We collected 350, and then 125,000, then 210,000. If we add up all together, and that will be 905,000. You're going to add up this way. So you're going to be adding up this way. So let's look at the first one. My first one is 170,000, and we have 400. 400 altogether, 350 plus the 50, which is your 400,000, and then we have is 335,000. That's my second budget, which was a collection. Now once we sales budget and collection, we're going to produce a product when we sell it. So production budget must be adequate to meet the budgeted sales to provide a sufficient ending inventory. We want to make sure we have enough in our ending inventory, and then we have enough in our production. In order to do a production budget, what we need a budgeted sales for that month, and we're going to add what we need our ending inventory, that is our need, minus what we already have, which is in the beginning inventory, equal to what we are required to produce. That's what we are required to produce. So now in order to do a budget, this is my question, and then from there I'm gonna make it shrink a little bit, and then so that we could see the question together, and then we're able to do it. Now it says Royal Company wants an ending inventory equal to 20% for the following month's budgeted sales. So what I'm going to do is I am going to bring my budget, the budget we did, sale budget. I am going to bring this, I am going to copy this, and I'm just going to put it at the side. I know I still need my other one, but that's all right. I'm going to paste it here. Oh, it did not do it. So let's go here. Copy this. Now it should come in with it, because you need to have it beside it in order to paste it. So in order for us to have an idea of what's happening, so I need that budget in order to see what is my budgeted sales are. So I needed to see my budgeted sales. So let's do the question and see what the question is asking us to do. So what we need is 20% of next year's budget. So that's what we needed to do. But they told us in the question, March 31st, we have some units were on sale. If ending of one becomes the beginning of my April, so this becomes the beginning of April, and then that 4,000 will be my beginning inventory for the month of April. So that's the enter. But we need a 20% of next year's budget, next year's sales. And what we're going to do is if we are to look at it, 20%, my next month's sales are 50,000, and then I need 20% in my ending inventory, and that's how we got the 10,000. So, and then if that's how we got the 10,000, so 20 plus the 10 equal to my 30. That's my total production need. And then what we're going to do is we are going to minus the 4,000 equal to your 26,000. Next, what we need to complete May, June, and then the quarter. So when you have a 5, my next month is my June. So my next month is my June. Now ending of 1 becomes the beginning of next month. So if this was ending of April, becomes the beginning of my June, beginning of May. So this, I'm just going to put a 10,000 here, and that is going to be a minus. So just this 10,000 will come in here, and that is my 10,000, and I am going to put it at, it is already a less. Either you put it in the brackets or you have a less. And what I need to do is I need to keep my desired ending inventory is 20% of the next month's sale. So my next month's sale, that's what I need, 20%. So my next month's sale, if I'm in May, my next month's sales is my June, and I need to keep 20% of that. 30,000 times your 20% will give me 6,000. And if ending inventory, I need to add it. That is my total need. My total need becomes 56. I already have it 10,000 in my beginning inventory, I only need to produce 46,000. So that's what I needed to do. When I go to the June, I needed to know what my July sale is. My July sales was given to us. My July sale was, I didn't bring that in with my July, which was 25,000. So if it was 25,000, I needed to keep 20% of that in my ending inventory. That will be my 5,000. So what is going to be, my July sales was 25,000, and I needed to keep it in my inventory. How much I need to keep? 20%. That's how I got the 5,000. If I add both my what I'm gonna sell, what I need to keep in my ending inventory, that will give me 35,000 units that I need. From there, what I needed to do is ending of one becomes the beginning of next month, and that is my 6,000, and that will be gives me 29,000. When you're doing a quarter, when we do a quarter, my ending inventory, the end of the quarter is June, the start of the quarter is April. So I am going to put my ending of the quarter will be my 4,000. My beginning of the quarter is your 4,000. My end of the quarter is 5,000, which is June, so that will be 5. So now I'm gonna add these two numbers. That will give me 105 minus your 4,000 will give me 101,000. That will be the required production. So now my next one we are gonna do is my next one I have to do is I don't know what's up with that. All right. So next one is my direct material. Direct material works the similar way we just did the production, but same but not similar. It works the same way. So we have is raw material. So if you're going to produce a product, my first cost is raw material, labor, and overhead. Raw material needed to meet the production schedule. So raw material that you need to produce the production schedule. Then we are going to add the desired ending inventory. That will be your equal minus what you have it at the beginning, and that's what you purchase, not used in production. That's what we're going to purchase because that's my purchase budget. So let's look at the raw material and see what the question is giving us. We are going to go to this question, and then we are going to do now the production material per we have a production, and this production came from where? Your production report. So this came from your production report, which we just finished doing it. My production report, if you were to, we didn't just finish, oh yeah, we did. So this is my production report, and what we have is my production for the month of April is 26. For the month of May is 46. I have an extra 0, 46, and then 29. 26, 46, and 29. So this is where the production is coming. And now we could also have to do the production need for the month of July in order to complete this table. But as we get there, we will do that. Material. Now the question told us in this case at Royal Company 5 kilo of material are required per unit. If we're going to produce our production is to produce 26,000 units, what we need is 5 kilogram of a material. So 5 kg, 5 kg, and 5 kg. And then what we're going to do here is what we needed, we multiply it. To produce 1 unit you need 5 kg, but we're producing 26,000 units. The kg that production or we need is the kg altogether we would need is 130,000 for the month of April. Then they said add the desired ending inventory. What do we need? They said management wants material on hand at the end of each month equal to 10% of the following month's production. So my following month's production is 46,000, and if what we need is they're telling us how much we need, but we needed to see the material first, how much we need. So let's go 46,000 times the 5 will give me 230,000. Then I go to 29 multiplied by the 5, and it is going to be 145,000. And then my desire will be 10% of my I need 10% of my next month's production need, which is 230,000, and this will give me the 23,000 that I need to keep it. And if I add both numbers together, that is 153,000. They told us ending of March 31st is 13,000. If that's the ending, that becomes the beginning of my this month or my this quarter. So if this is this month, and they also told us the cost is 0.40 per kilogram, but we needed to finish it. This will give me 140,000. Going further, when you are in a month of I'm going to change the ink. When we're month of May, what we need to do is we need the desired ending, which is 10% of my 145,000, and that will be my 14,500. And then ending of this month becomes the beginning of the month of May. So this will be your 23, and now we're putting it together. I will add these two numbers together. That will be my 244,500, and I take away the 23 that we have. That will give me 221,500. So when you do this, I need desire is my 10% of my next month's production need, and that will be in if we did it in a class, but then I needed to see what my production need is for the month of July. I'm going to go to my production budget in order to do it for the month of July. So when we have it, we have here is we are going to put it here. My budgeted sales for the July was 25,000, and then what we did is ending of one becomes the beginning of next month. So in this case, my beginning will be my 5,000. So my beginning will be your 5,000, and I need to add my desired ending. My desired ending is I think it's 20% of the following month's budget. I needed to look at my August sale too, and my August sale, if I were to, I'm sorry, I had to go back and forth because I didn't print everything that I needed to print. My sales in August was 15,000. So they said that in July, what I need 20% of next month's budgeted sales. 20% of that will be my 10,000. That's what going to be 10,000. Sorry, 20% is not going to give me that. My desire. My budgeted sales for the month of August is 15,000, and I'm going to change the ink. I need to add what we needed to keep. In this case, I'm going to keep 20% of this, and that will give me 3,000, and that will be my 3,000 I need to keep, and this becomes your total need. My total need was 28,000, and my required production here will be 23,000. So that is my required production. So I'm going to take it to my number that we are doing here. My we needed to keep we needed to keep my 10% of it. So my production needs is 23,000, and each unit will take 5 kg, and that is for the month of July. 23,000 multiplied by the 5, and that will be my 105,000. And what I need to keep it, I need to keep 10% of that. That will give me 11,500, and I'm going to add these two numbers. It will give me 156,500, and ending of one becomes the beginning of the next month. In this case, it will be 14,500. I will minus it, and that will give me 142,000. And now when we do the quarter, and my quarter, this is my ending, and this becomes my beginning. So my ending is 11500. My beginning is 13,000, and that is a minus. And when we do this, we multiply by 5. That'll give you 505. And I need to add both numbers, which is 516,500 minus the 13,000, which is 503,500. Now my next one is my production budget. So now what we did is we purchased this material, and once you purchase it, we have to pay this material. So the question told you Royal pays 40 cents per kilogram if for its material, 1/2 in the month of purchase, and the other month is the paid in the following month. So if you purchase in April, half will be paid in April, the half will be paid in the following month. So let's look at it. How much do we need in order for us to calculate my cash disbursements? And when you do that, it is what is the cost? If I were to think about it, our budget, when we just did a purchase budget or direct material budget, and what we are costing us is the 40 cents per kilogram. So it is 40 cents per kilogram it's costing us. If it's costing us that, we needed to in this case, I multiply by the 140 times the 0.40, 140,000 times your 0.4 gives me 56. And if I take my 221 my 221 times your 40 cents, I'm going to multiply by the 40 here, I'm going to multiply by the 40 here. First I get a 56, and this one will give me 88,600. My next one will give me 56,800. Let's take it further. They're saying that now we needed to say that we have a March 31st, our accounts payable is 12,000. So I'm just going to shrink a little bit so I know. My April purchases was 56,000, and my May purchases are 88,600, and my June purchases are 56,800. They told us how is it going to be collected. The collected is 50 and the other 50. This 50 is collected in the month of April, and this will be collected in the month of May. We have a 50 and we have a 50. This is collected in May, and this will be collected in June. And when you do this, we have a June, this is also June, and 50% will be collected in June. The other 50% will be collected in the month of July. So let's do 50%, and I'm going to do it in April, and the April here will be 28,000. The other 50% will be in the month of May. This 50% will be in a May, and that will be my 44,300. The other 50% will be in the month of June, 44,300. So that's what happens. So we have 88,600 times the 50%. That will be go here. 56,000 multiplied by the 50 will go here. So April, May, June, July. And I do for the first 50%, and I am going to put it in June, and that is your 28,400. If I add all the numbers here, 12,000 plus the 28, it will give me 40,000. My next one will give me 72,300. Then we have next one is 72,700. And my quarter, again, you have to move everything in this in the quarter. 28,000, 28,000, 44,300, 44,300, 28,400. If we add up all together, we are going to get 185,000 for my budget. My next budget that we are going to be doing is my direct labor budget. So this is my direct labor budget. Again, you are going to get to your production, and these came from your production budget. So the 26,046 and 20 came from your production budget that we previously did. If you can always go back and check that production budget. So let's go further and then complete our next one, which is the labor. That's the second component of our production, direct labor cost. All roll, each unit of product requires 0.5 hour of the direct labor. So each unit of product that we make, we required 0.05. Sometimes they can give it to you in minutes. If they give it to you minutes, convert it into an hour. So this will be 1.05, this is 0.05, this is 0.05, and that if I multiply by the production need times the direct labor hours, that will give me the labor hours. In this case, it will be 13,000, and this will give me 23, this will give me 14,500, and this will give me 5050. So let's go further. They're saying the company has no layoffs policy, so all employees were paid 40 hours per each week. In exchange for the no layoff policy, worker agreed to a wage rate of $10 per hour regardless of the hours they worked. So what happens in this case? So they're saying it, we are paying them $10 an hour, even though if they work more, we're still going to give them the $10. That's what we're going to do. But let's do this part first before we can get to it. The wage rate here will be $10. So I'm just going to put it in here, 10, and this is 10. Maybe I can change the ink so you will see it. I will do blue, and this is multiplied by the 10. This is multiplied by the 10. Now that I did that, so now for the next 3 months, the direct labor workforce will be paid minimum 100 hours per month. They will be paid minimum $1,500 per hours. But then if you were to think about it, their guaranteed hours are 1,500. If they work less, they are still gonna get paid for 15. That's what it means. So their minimum is 1,500 per month. If they work less, they're still going to be paid 1,500 hours, because we say that there's no layoffs. They're taking less money. Labor hours that are paid 1,500 here, because the labor hours was the guaranteed was 15. In this case, the labor hours that was paid was 23. Here will be 1,500 labor hours. So my labor cost will be 15,000 here, my 23,000 here, and my 15,000 here. 15,000, and if I add all these three numbers together, or I could do is I can add these three numbers, 15 plus the 23 plus the 15 will give me 5,300 direct labor hours, multiply by the 10, which is going to be your 53,000. My next component is to complete my manufacturing overhead. We have two type of manufacturing overhead. We have a variable and we have a fixed manufacturing overhead. First, what we're going to do is we're going to do a variable, then we're going to move to our fixed. When you have a fixed, so this is the budget. Royal uses a variable manufacturing overrate, $1 of the units they are produced. Again, you are going to go to your production budget. It tells you this one is going to go to production. When you don't have to remember this, because the question will tell you how many units did we produce. From there you could do your budget. So let's do that. And they said that it's per dollar, so 26 times the 1, 46 times the 1, 29 times the 1, 101 times the 1 will give you variable manufacturing. But we have a fixed manufacturing, and now we have something called the non-cash item. So when you look at your cash budget, we needed to worry about it at that point. At this point, we are not going to worry about it because we're just looking for the cost. My cost is 50,000 for every month. So 50,000 here, 50,000 here, and if I add them together, it will be 150. And then if I add both variable and fixed, and then we know that part is non-cash. When you do a cash budget, we have to ignore the 50,000 from it, and then we are going to when we do our income statement, we have to go back and add it later. My total manufacturing is my 76 here, and that is my 96, and this is my 79. And what we're going to do is we're going to add together. That will give me 251 for the 250 manufacturing. Now they said less non-cash. They told us in the question we have 20,000, that is my depreciation or an amortization, or we say a non-cash item. So minus the 20 gives me 56. That's how much we paid cash disbursement for my manufacturing overhead. Minus the 20 here, minus the 20 here. This is minus the 60. If we add them together, it will give me 76. This will give me 59, and this will give me 191. So that's how much the cash disbursement was. Now we're going to go to our finished goods inventory. When you have a finished goods inventory, now that you can complete June 30th, ending finished goods inventory budget at Royal, manufacturing overhead is applied on the basis of a unit's product on the basis of direct labor hours. So it is done on the direct labor. So what we're going to do is we have to look for is predetermined overhead rate, which you already did before. And then what we needed to do is we needed to apply it on this. So whatever we learned in our previous chapters, this will come in handy when we do this. So now we are ready to do it. They were kind, and they did our first one. And direct material came from your budgeted. So for when you think of a finished goods to produce 1 unit, what we need is we need 5 kilograms of the material. The cost of per kilogram is 40 cents, and we're looking for finished goods per unit. So we're looking for finished goods inventory per unit. When we think of a direct labor, they told us in the direct labor it was taking 0.05 of an hour to produce 1 unit, and the direct labor cost was 10. When you think of a manufacturing overhead, we wanted to know how much per unit cost is for direct manufacturing overhead. And what we need to do is we needed to do a we needed to do a formula. My formula is for predetermined overhead rate, and at the bottom they said it was a direct labor hour. So direct labor hour, again, it's just but an estimate. When we did this, my total manufacturing overhead cost was 251. So that is my estimated overhead cost, which is 251. And what we needed to do is we needed to go to our direct labor hour budget, and we wanted to know how much was the labor that was required to produce the each unit, which is 50-50. Those were not each unit, the total manufacturing direct labor. This is the total direct labor hours. This is the total estimated manufacturing overhead cost. This was 5.50. It gives me 49.70. So this is my applied. My applied here is going to be on the direct labor hours. So if this is per hour, and what we need to do is, so it will be 0.5 direct labor hours times the 49.70. We learned this when we did chapter 3 of a job order costing. Some of you guys didn't do that right in the test, so make sure you do this. So what we're doing is my base was my base was direct labor hours, so we multiply by the direct labor hours. So that is my total. This will be my 50 cents. I was going to say $5. This will give me my $2.49. These are the three costs, and this is the cost per unit, and that will be your 499. So if we add all the costs, what we're doing is we have a material, we have a labor, and we have a manufacturing overhead. And we wanted to know what was my finished goods inventory, and my product cost is $4.99. What we worked it out. I needed to know what was my ending inventory on June 30th, and that will come from your budget. And let's look at it, go up and look at it. What was my budget from the production budget? So in order for me to do that, this is the end of the quarter, and I need to go up. I'm sorry, I'm taking you up to our production budget. Let's see, disbursement material. My production budget, did I complete it? I did complete it. Where did it go? Oh, I did do it. Why? How come I went away? Did I not did this? I thought we did complete it. So in this case, I thought I did it. I'm not sure what happened to it. My June 30th, my ending would have been 5,000, because 5,000 units. So that was, I don't know why it went somewhere else. I don't know how come it got raised. I don't know. I thought I completed this. I don't know what happened here. So it got raised for some reason. But when you completed it, my ending should have been ending inventory on June 30th should have been 5,000. So mine got raised. I'm sure yours didn't get erased. Oh, I am going for this will be your, from the production budget, you're gonna get your June 30th ending. So, and that if it's not that, if you don't see it, we can go through it. I can show you in the class. That was 5,000. I don't know what happened to my budget. I did do that budget, so I don't know what happened. So my ending finished goods inventory will be, in this case, it's a dollar value. The value of my finished ending ending inventory is $24,950. Next, what we have to do is selling and administrative budget, and let's complete that, and then we can see what the question is asking us to do. They told us some of the things are given to us, some of the things aren't given to us. My budgeted sales are given, it's from your sales budget, and for the month of May was 50,000, and your June was I think was 30, and then we had 25. And when you do a budgeted sales, we add all the number together. That is my 100,000. They told we already know at Royal variable selling and administrative expenses are 0.5 cents per unit sold. So 0.50 here, 0.50 here, and 0.50 here. So this will be 50 times the 0.5 will give me 25,000. It will give me 15,000. Here we will get a 50,000. We have two type of selling expenses. We taken care of a variable. Now we're taking care of the fixed, and the fixed is 70, and some are cash and some are non-cash. First we needed to put it in all of them, and now we're gonna putting it together. That is my 210,000, and I don't know why I have 250,000 and 210,000. Now we at my total expenses, my variable plus my fixed, and that is my 95 here, 85, and that is my 260,000. The question is looking for what is my June cash disbursement. My non-cash, I needed to know how much is non-cash. The fixed selling and administrative include 10,000 cost primarily for the depreciation. So depreciation is a non-cash item. If it's a non-cash items, I needed to deduct it. In this case, my total deduction from here will be 30. I will have an 85,000, and this will give me 75. And my total is going to be 230,000. So this is my cash disbursement for the selling and admin. Next, what we're going to do is we're going to go to my cash budget. When you go to your cash budget, we already done receipts, we done disbursement, we needed to know cash access. Do we have extra cash, or do we have a deficiency, or do we need to borrow money? The beginning of one month becomes the ending of the next month, and ending of one becomes the beginning of a next month. We add our receipts equal to what we have it available minus my disbursement. Either I have a positive or a negative, and if it's a positive, we show as a positive. If it's a negative, we show as a negative. But if we have a negative, company might require a minimum balance. If their minimum balance is 30,000, so we need to retain that. If you're retaining that, we needed to keep a we need to go borrow money if we don't have enough money. And we also have some other disbursements that we have to pay, not just the cash disbursement from our purchases or the cash collection disbursement. We have other ones, and in this case we pay the dividend, we purchase equipment, and this is what the balance we started off with. So let's look at it and then make sense out of it. And this is the book, the question is telling you beginning balance. We started with 40,000. Collection will come from for each month we had a collection, and that comes from your collection budget schedule for expected cash collections. That's where they come from. And then if we add both numbers together, that will be my total cash we have available. Then we have to look at the disbursement, and then we already finished the material, labor, overhead, selling, equipment purchase, dividend. We already finished it. All we're doing is we're putting it together. So now what we're going to do is, in this case, I am going to take this slide out, and I am going to bring this slide in so that I can show you how to complete it. The reason I don't know why I have these kind of things there. So then you have a direct labor. These are coming from your budgets that we did. So material comes from the material budget, direct labor comes from direct labor, overhead comes from the overhead, selling comes from the selling. But with the purchase, they told us we purchased equipment in May. So if you purchase it in May, we wanted to know how much we purchased in May. There's nothing here, and I needed to put 143,700 in May. They also said that, and they also told us in that case that, and purchase of 14,300 in May and 48,300 in June. So when you do this, you're going to put it in May, and you are also going to put it in June. And June, you're going to put 48,000 for the equipment. The dividends, they said pay a cash dividends of 49,000. It is only going to be, the dividends are only paid in the month of April. So my dividends are paid in the month of April. It's not paid here. There's no paid here. Now they said if they borrow it, they said maintains a line of credit 16% for 75,000. So they maintain it. So we don't know how much our cost is, how much we're borrowing till we finish the month of April. So if I were to do that, my cash balance plus the collection gives you my available. These ones are my disbursements. If I add up all my disbursement, what do I get? I get something like 230,000. So that's what we get, 230,000. Now they said excess deficiency of cash available for over the disbursement. So did they show you that? Now how did they get this? I have 210 we collected, and we paid out for the expenses, which is 230,000. The excess is 20, either a positive number or a negative. Now my disbursements are more. If my disbursements are more, I'm going to have a negative number, and that negative number is 20,000. Either I borrow it, I have to borrow it because they told us I needed to keep a minimum balance of 30,000. I need to keep a minimum balance of 30,000. So when you do that, that is my next one is just doing that. So what we have is we need to keep a minimum balance of 30. That's my ending balance. I am already in a negative. I needed to borrow 50,000 in order to have a positive balance in my cash account, and that's what it means. I need to keep a minimum balance of 30,000 in a cash. So this is my minimum. If it's a negative number, I need to borrow. If it's a positive number, I can pay back the loan that I can pay back the loan that I have. So this is, let's do the month of May, and then we could finish it. Where do I do? I'm going to put it in here. So ending of one becomes the beginning of next year or next month. In this case, this is my 30,000. So I'm going to put it in here. My cash collection, you're going to go to your cash collection and look for your for the month of May. And according to me, I printed that sheet. I just printed it. That's my 400,000. Altogether, we have it available 430,000. My material, in this case, I'm writing it top of this. I need another ink because that's how they show. Maybe it doesn't show. Oh, it is here. So this is a good one. So I have 30 plus the 40,000 gives me 430. This came from your material budget. This came from your labor. This from manufacturing overhead, from your selling, and this is the equipment I showed you, and this is the dividend that is given to us in the question. So we are going to add up all your money that we collected, the money we paid, difference between the both. I have a balance of 30. I have a positive balance. It is okay. I need that balance, so I'm not repaying anything. You only repay if you have more than 30,000 in your bank account. So let's do the month of June. Ending of that becomes the beginning of there. That will be my 30,000. My collection is 335,000. Again, go to your collection, and this is giving me, if I add both numbers, 365, and I have 72,700. I printed it. I can't see it properly. This is, I got it from direct labor, and that is my 15,000. This is my 59. This is your 75,000. 48,300. We are not paying any dividend. If I add up all my disbursement, this is my cash disbursement. It gives you 270,000. Difference between the collection and the amount that we paid in disbursement is your 95,000. I have more money. If I have a more money, what I needed to do is I needed to, whatever I borrowed, I need to pay it. So I'm going to pay the 50,000. If I pay the 50,000, I will have less money left. So I have 95,000, and that's the money that I have. So this is the, I'm going to put it in here. I have a 90. I repaid that. I also have to pay interest. They told us in the question that we pay interest every quarter, and the interest is where we are now. Quarter comes, I needed to produce my financial statement. We pay 16% interest. So let's calculate my interest on here. We borrowed 50,000 in April. We paid it at the end of June. If I borrowed $50,000, my interest is 16%, and we borrowed in April. There's 3 months are gone by. 3 divided by 12. My interest that we pay to the bank or whoever we are borrowing from, it is 2,000. My ending balance will be 43,095 minus the 50,000 minus the 2. That's what the balance is. Now we're finishing our quarter. When you finish your quarter, just add all the numbers. So we have my first number. When you have at the cash beginning, what did we start it off with? Again, my beginning, I started off with 40,000, and what am I going to end up with? My ending balance in the cash will be your will be 43,000. So this is going to be my 43,000. Now everything else is going to be just the total. So if I were to do this, this is going to be, if I add all the numbers, only the beginning and the ending, we are going to take it from our schedule, but the rest is going to be coming as a total. So this is 905. If I add both numbers, and then I add all my 3 numbers, that is 185. We have 53, and we have 191. In your course, I posted these PowerPoints. What you could do is you could look at those PowerPoints, but I did, when I did this, I deleted some of the schedule in between schedules. Otherwise, this chapter has 86 slides, so that you don't want it to, I didn't want it to have 86 slides here. 190. And then what we have is, we dividend is 49,000, and this is going to be your 90,000, 900,000, and gives me 45. I have so how did I get the 45? I have 945 minus the 900,000 gives you 45. And what we have here is, if I have that, this will be my quarters, the access over the available over the disbursement, and this stays, if I were, this was a positive, this is a negative. And what we're going to do is, we borrowed, how much did we borrow? 50,000 was borrowed. We repaid $50,000, so 50,000 should be here. So we borrowed 50. If you look at it, my repayment was here, and I repaid 50,000, and we also paid for the interest, and that gives me 2,000 will be a negative. 45 minus the 2,000 will give me a 43,000. Now once we did the cash budget, what we're doing is we are ready to do our budgeted income statement, and we are ready to do our normal income statement. So let's do the budgeted income statement. We might have to go back and forth to bring the numbers to see what we started off with. And we are, when you're doing a budgeted income statement and you do the name of the company that we're working with is Royal Company, and what we have is we are doing budgeted balance sheet. And we might have to do, we normally have to do budgeted income statement first before we could do the balance sheet, because the income statement comes first before we could do the balance sheet. So let's do the income first, and then because the number from the net income number, I needed to put it into the income statement number, I needed to put it into my balance sheet. So first I am going to do an income statement. Again, this is my budgeted income statement, and it is for the quarter. Name of the company, budgeted income statement, and then for the year ended June 30th. So this is June 30th. We are doing it for the quarter. When you have a quarter, we have a April, May, and June. That's my quarter. You are going to go to your sale, and you're going to look at your dollar value of your sales, and that is my $1 million. So go back to your sales budget. This will be my sales. Next, we have a cost of goods sold. Cost of goods sold is a manufacturing company to produce one product. We went into manufacturing. It cost us $4.99 to produce one product. When we are, if we were to do that, 100,000 times the 10 will give me $1 million. That's from your sales budget. Costing us to produce a product, one unit of a product will cost us $4.99, and we sold 100,000. That is your 499,000. Difference between the both is my gross profit, or we could call it a gross margin, and that will be your 501,000. My less, we are going to go, you have to go to selling and administrative budget, and then you're going to look at it for the full quarter, and those are selling and administrative expenses. In this case, that will be your expenses, and when you have that, we are going to deduct my selling and administrative expenses. That is 260,000. Again, you're getting it from selling and administrative expenses. I'm going to take you where I got this number, but I have to go all the way to the top. Selling and admin, if you look at it, my selling and admin was 260 here. So that's where I got for the quarter. And the other one I wanted to show you was the cost. From here, I had in finished goods, the cost of producing a product was $4.99. When you worked it out, the numbers, all you're doing is bringing it together and putting it on your income statement. So let's 260. We also, difference between the both is that it will give me an operating income, and that is your 241,000. And we have is interest expense. My interest expense is from my cash budget, which is nowhere to be found on our selling and admin budget. It has to be put it separately. And what will that give me? That give me in my net income, and I needed to put that net income with my balance sheet because it's in my part of my retained earning, and that in order for my balance sheet to balance, and that is my net income, which is 239,000. So when we do that, I'm going to show you how my balance sheet will work. So let's look at my balance sheet now. I am going to do I made it smaller. I wanted to make it a little bit more bigger so we know. So they told us in the question we have 50,000 land, we have common share which is going to be 200,000, and my retained earning beginning was 146. And what we need to do is we need to add a net income that we just calculated, and we have to add, which is going to be 239,000, and we have to minus the dividend. I think our dividend was 49,000, and that will be my retained earning at the end that I needed to put it on my balance sheet, and that is my dividend. So you did a dividend, you did a retained earnings statement, and that is your 336,150. So but before we do that, and I have my assets, I have my liabilities, and I have my equity, and those are some of the things that we have. So now what we need to look at it, some of the things I already know. I know we have a current assets and we have my long-term assets. We have a current assets and we have my property, plant, and equipment. We know that we purchase an equipment, and when you purchase an equipment, we needed to see what numbers were there, and property, plant, and equipment. First one is my cash. My cash is for the quarter. Again, it came from your cash budget, and that cash budget, the balance in my cash was 43,000. So that is my first one is my 43,000, and we have next is my accounts receivable. Accounts receivable is we're looking at how much of the sales was not collected from June. So if you go to my June, and my June sales were, I think it was 300,000, and the collection we do 70% in the month of the sales, 75 and the 25 the following month, and I multiply this number by 25%, and that is going to give me accounts receivable, and that should be my 300,000. Sorry, that should be my 75,000. Again, you're going to go to your sales, collection sales. Then we have different type of material inventory. We have a raw material inventory, and then we had a finished goods inventory. So the raw material inventory, I know we had go back to the raw material. It was 11,500 kg multiplied by the 0.40 kg. That's what the cost is, and that will give you raw material will cost 4,600. My finished goods, I had 5,000 in my finished goods. The cost per finished goods were $4.99, and that will give you 24,950. That will give me 24,950. These are my current costs, which are current assets, 147,550. So 447,550, and then we are looking at my property, plant, and equipment. There we were just told that I have a land. The land is not just told, it means it's in the question. It is 50,000. When we think of an equipment, we know that some of the equipment was purchased, but if you have everything else, I don't know how much the number that I started off with, because they did not tell us this number. They did not tell us, so we have to come out the balance some other way. So we have to come out the number another way. I know my liability, I have an accounts payable, and what we have is we have common stock here. We have retained earning. we already know the number 336,150, and my common stock, they told us in the question, was 200,000. My accounts payable is, we got it from the purchase schedule, and that was our 50% of my June purchases, and that my June purchases was 56,800. We pay 50% already, the other 50 was not paid, and that will be your 28,400, and that is my total liability. My total liabilities are 28,400. My liability plus my shareholders equity is equal to, this number is, if I add my equity plus my total liability, and that will be, if I add both numbers, will give me 564,500, and I need the same number here, 56,400, because we know that in accounting your total asset is equal to your liability plus your owner's equity. In this case, your total liability plus your equity, we just calculated it, is 564,500, and this will be 56,400, 560,400 and 500. If I add everything, this becomes my x will be 367, and this is the plug-in number. We will not be asking you to zoom it. You will be calculating in the test purpose or in the case that we give it to you. So this is where we did the balance sheet. Now what happens is, next we're going to go the self-imposed budget. The self-imposed or participatory budget is budget that is prepared with full cooperation and participation of all managers. You cannot have one manager doing something, the other one isn't doing the budget. So all the managers has to participate it, and this was the summary of the chapter. Again, we're going to be doing the questions in class when we meet on Thursday. Thank you so much for watching. Thank you for all your subscribing to my channel. Take care and bye for now.